August 16th, 2024. Whenever you get a gap down on the open after the prior day was a bull trend day, you're most likely going to end up rallying up back into the range and try and test the high. You can see the gap down ended up about at a 50% pullback, and that's where we found support. See in this area. So we basically opened right at a 50% pullback and bulls bought immediately. It's not that surprising. Again, you got to think about the fact that on a daily chart, this is a strong bull trend bar. And bulls in general are happy to buy 50% pullbacks of strong bull trend bars. On one, but a big tail on the top and a big tail on the bottom. We might be entering a trading range with yesterday. I'd imagine, this looks like the area of the possible bottom of trading range, or it might be down here. But once we start to rally, this is the top of the trading range. So whatever rally we get, probably going to come up into this area and then start to sell off. But regardless, bulls, they buy the 50% pullback. You get a good looking, or you get a bull bar in bar one. There's a tail on the top and a tail on the bottom. So not as much urgency for the bulls as there could be, but we're probably going to go a little bit higher. I would say we're probably always in long. The gap down looks more like a bear trap than anything else. Bar two, an inside bar, a bull bar, but a tail on the top and a tail on the bottom. Most traders do not want to buy above a high one in this area when you haven't had strong consecutive bull bars. So the bulls see the gap down as a bear trap and bar one as a new bull trend and an inside bar, high one on bar two. The bears are hoping this is all just a pullback from the gap down and that we start to channel downwards. So this is a spike, or the spike was the gap. Now we're getting the pullback, and then they're looking for the channel to start. Bar three, another bull bar. We have three straight bull closes, so that's good for the bulls. We're probably going at least a little bit higher. I would say we're pretty much definitely always in long. There's going to be buyers below three because bar three is a bad low one short for the bears. We have the gap down, and then for the bears, this is their first reversal down. So this would be a low one short, but it's a bull bar, and you don't want to sell below a bull bar, and especially after three straight bull bars. So there's a lot wrong for the bears with selling below bar three. We're probably not going that much lower if we do go lower at all. Reasonable chance that we've seen the low of the day. In general, on bar one, 20% chance that it's the high or the low of the day. Was bar one, higher than 20%? Probably, maybe a little bit, but not really. I don't think it was a 30% chance that bar one was the low of the day. Let's put it that way. So buyers below three, and then a reversal up on bar four. Good for the bulls. We're probably going at least a little bit higher. The bears are hoping it's two legs. So we had a rally on 1 through 3, a pullback to below 3, and then a second rally up on bar 4. Big tail on the top of 3, tail on the top and bottom of 4. So yes, we're always in long, and we're probably going a little bit higher. But you can see there's obviously an issue with this. Why are we getting so many tails on all the bull bars? Still a lot of bull bars, and we're still going to most likely, again, continue higher. But it looks like it's going to form a leg in a trading range is the point. It doesn't look like this is going to be another strong bull trend day. And it was a bull trend, but you can see we closed the only gap that was open in the day right here. So it was a little bit more of a trending trading range day than anything else, which we got one of those, I believe, last week, but similar thing today. I'll just pull it up. Yeah, August 9th. You can see this was last week. We got a trend and then a reversal up, and then, we got a trading range, a reversal up, and then a second trading range. So this is a pretty classic example. Here's another example. Generally, what's considered a trending trading range day is when you get a trading range on the open, a 4 or 5 bar breakout, and then a second trading range that usually the high of the first trading range is around the low of the second trading range. This was a better example of a 4 or 5 bar breakout, but today was a better example of the high of the trading range being the low of the second trading range. So bar 5 consecutive bull bars, but 5 is not able to close above the bar 3 high, so it's not quite able to break out. It's still 5 straight bull bars, so nothing to sell, and the channel up is relatively tight. It's a low 2 short below bar 5. Obviously I would not take that. There's way too many bull bars and the channel up's too tight. There's going to be more buyers below 5 the same way there was more buyers below 3. Bar 6, you can see buyers below. Bears are hoping low 2 short triggered, micro double top from the moving average, and we're going to get a reversal down. They're hoping for like a second leg down from the gap and from this bear bar, probably something like that. The bulls, their argument's much better. Yes, they see the low two, but it's not a good low two. We have way too many bull bars. We're going higher, probably at least to the moving average. So 6 is not a very good sell. There's not really much reason to be short. Bar 7 is a surprise bar. You do oftentimes get surprises on bar 7. There's sometimes news events that happen at 10 o'clock Eastern Standard Time. If you're on Eastern Standard Time, there are news events that usually happen around 10 o'clock. So sometimes bar 7 can do stuff like this, but I still think it's just valid to say, okay, bull surprise bar. We're always in long, tail on the top, tail on the bottom. I don't care what the news event was. I'm just going to see how it affects the market. So the bears, they're hoping one pullback, and then this is a big second leg trap, and we get some sort of reversal down. It's not a completely invalid argument. I didn't think that we were going to get a big bull trend day today. We ended up getting, you could call it a bull trend day. I would probably classify it more as a trending trading range, but we definitely got a longer breakout than you normally would on a trending trading range day. But that's just how I viewed it today. But I wouldn't blame you for calling it a small pullback, or not a small bull trend. I wouldn't blame you for calling it a bull trend. But the bull trend started in the middle of the day today, rather than early in the day. 8, an inside bar, a bear bar, but not able to close near its low. So it's basically just a doji bar. Do you want to sell below 8? Probably not. Probably better to just wait and see what happens. Again, the bears are hoping it's a second leg trap and that we're going to reverse back down towards the low of the day. The bulls think that this is just a pullback from their bull trend. They know that 7's strong enough to get a second leg up, so they're betting on that happening relatively soon. Another inside bar on bar 9. We have consecutive inside bars, and inside patterns are final flags. So we have a final flag on bars 8 and 9. That's what the bears would see here, at least, I think. I thought the bears had a more credible argument, the bulls here, that this was some sort of final flag. Again, this is not a very strong bull trend. To me, this looks like a leg in a trading range. So I am treating it as such. So yes, it's a tight channel up, but to me, it looks like a leg in a trading range. And if you think it's a leg in a trading range, the tight channel is a little bit less relevant. So it makes the parabolic wedge sell on bar 11 more reasonable. So bar 9, an inside pattern. Bulls just see a high 1 and bull trend. Bears, they see 1, pullback 2, pullback maybe 3, and then reversal down. 10, a bull bar closing near its high. We are always in long, and it is a bull bar closing near its high, but it's a third leg up. So we have the 1, pullback 2, pullback 3. So a third leg up, relatively high in what's probably a trading range. It's not breaking out of anything really, not anything important. I think what would have been important is if we got consecutive bull bars 10 and 11, and that closed above the prior day's high. You can see we tried to get above the prior day's high and failed and made a perfect double top with yesterday's high. So to me, this looks like a vacuum test of the high of the range. You don't want to buy all the way up here. It's a third leg up. If you're 10 bars into the trend, the quote unquote trend, and it looks like this, and then you get the best looking bar on the 10th bar, there's probably an issue with that, quote unquote trend. It's probably more of a leg in a trading range. So I think the important magnet was yesterday's high, and the bulls wanted to drive the market above yesterday's high, and the bears wanted to form a double top and a parabolic wedge open. Additionally, if they got the parabolic wedge open like they did, so bar 11, bear bar closing near its low, parabolic wedge open. If they got that, it's also a failed breakout above a final flag and a reversal down. This is also a final flag, this tight trading range over here. Final flags usually lead to slightly higher prices, but the market ends up testing back into them. So the breakout mode patterns are usually the same as final flags. So IIs, IOIs, OOs. We got an OOO pattern today, which was pretty interesting. But all of those essentially, final flags and breakout mode are similar things. It depends on the context as to what you would call it. So in this particular situation, 8-9 is a final flag. And we got a failed breakout above the final flag, which is very common, and then a reversal back into the range on bar 11. So bar 11, a parabolic wedge top, 3 pushes up. So first push to bar 5, second push bar 7, third push to bar 10, and a reversal down. It's a wedge double top with yesterday's high. It's a credible short for a swing. It's a possible high of the day. I thought it was reasonable to take a chance. Remember, coming into this day, I had a bit of a bearish bias. I didn't think, well, first off, that after a prior day's bull trend day, the next day we're going to get 2 hours of sideways to down trading. So I thought we might be at the start of that. I thought it was a little more likely. Once we started to get into this area, I thought it was more likely we were going to get below bar 1 and go down a little bit more. I didn't know how far I thought we would sell off, but I thought we would get below bar 1 once we started to get into this area. I was surprised we didn't. So bar 12, follow through. Another thing to note is the daily range so far. The daily range is 25 so far. And if you would, if we were trading last week, you would think 25 is a really small daily range. But the days for the past couple of days have been 40 to 50 point days. So when you're already, a little roughly half of that, a little more than half of that, if you're using the 40 to 45 range, then you know that the market is probably not going to make some humongous move. We're probably more towards the probably leaning more towards a trading range day. And though we're probably going to break out of the 18 bar range like we did and add to the daily range, it's probably not going to double, triple, whatever it was, or whatever we've been doing recently. So if the daily range is 40, 50, whatever it is, and you have a 7 or 8 point opening range, well, then you can, you're clearly in breakout mode, and you can, buy for a swing, sell for a swing, whatever. But to me, you see this pretty large range. I think we're probably going to end up getting back down, and forming a trading range more than anything else. 12, a bear bar. If you sold below 11, you probably knew the market was not going to go straight down because it is more of a trading range. Sorry, not because it's a trading range, because the bull channel up was reasonably tight. So you know that we're probably not going to go straight down. Bar 12 is a high one for the bulls, but it's not very good. There's a big tail on the top and a big tail on the bottom. So I'd rather not take the short. Bar 13, another follow through bar with another big tail on the top and the bottom. However, it's 3 straight bear bars. We're going to go lower. I think we ended up getting about exactly a measured move, roughly. Oh, a little more. This is another one of those interesting things in trading ranges where the market often will go below the second to lowest support level in a trading range and not the lowest. You can see we got below the bar 4 low. Excuse me. Sorry. You can see we got below the bar 4 low during bar 16, and we were never able to get below the lowest support point, which would be the bar 1 low. So although we sold off a little bit, we never got all the way down. 14, a reversal up, but a big tail on the top. Still a high one for the bulls, really not very good. There's going to be sellers above. In general, high ones lead to pullbacks and then trend continuation, but I think the trend is more down than up at this point. I think 13 probably made us always in short, so really not very good for the bulls. 15, a bear bar, but a big tail on the bottom. You can see we got a small gap up on the close of bar 14. It's showing some bulls buying the close. I think it's more just bears buying back shorts, but not much to do here. I think you're flat or you're short. It's reasonable to be short, taking a chance that we get, somewhat lower. It's a trading range, so it's reasonable to scalp at least a piece. I think 10 points was a reasonable scalp on this day, but you can see you would have gotten out in this area, which was a pretty reasonable thing to do. I would not probably scalp everything, but it's reasonable to scalp, I don't know, half to, I scalped half my trade, but I probably should have scalped more like 75% of it. So I kind of thought about that. As I exited, I was kind of having difficulty thinking about, should I be exiting more here? Because in trading ranges, when it's clearly a trading range, you want to be more quick to scalp out. And sure, it's early in the day, and so we might trend more, but still, if you look at it, we were pretty low in the range, and this did not have the makings of a big bear trend. None of this really looked all that strong for the bear. I mean, it was strong for the bears, but it just didn't look like the start of a big bear trend. So that's something you have to consider. And you can see 16 ends up being a give up bar for the bulls, but we're clearly always in short on the close of 16. But you got to realize that in trading ranges, being clearly always in short means you're probably about to reverse. So 17, a bull bar, but you can see, this 17 did something interesting. So this is where you get into the concept of, limit order trades, I think at least, revolve a lot around time, or trading in general revolves a lot around time, obviously. But if you look at a 1 minute chart, actually, we'll just do this. Thing, load. There we go. Sorry. Okay. It's kind of an interesting concept. So you can see we rallied really strongly for the first 2 minutes of the bar. So what's important, what I was trying to demonstrate was that 2 minutes into the bar was basically at the high. And 2 minutes into the bar, we were right here. So there's still 3 minutes left in this bar, right? Or whatever, we're 2.5 minutes into the bar, we're still right here. So what's going to happen for the next 3 minutes, 2 to 3 minutes? Do you think the bar is going to double in size? Do you think bar 17 is going to double? No, that's very unlikely. Do you think it's going to stay on its high? Maybe, but probably sellers above 16 scaling and higher, right? So I don't know. So there's a reasonable enough chance that it gets sold off, and there's enough time for the bar to do it. So what some traders will do is they'll sell up here as the since it's early in the bar. Understand, this trade only exists because we're 2.5 minutes into the bar and we're up here. If we're 4.5 minutes into the bar up here, it's not worth selling. But traders figure they still have a couple minutes left. So worst case scenario, well, not worst case scenario, but most likely, if you lose this trade, if you sell up here with a couple minutes left in the bar and you lose the trade, you're probably only going to lose a couple ticks or a point. More likely, we're going to end up getting something disappointing for the Bears or for the Bulls like this, and you're going to make 4 or 5, 6 point scalp, however much it is that you're going for. So it's a time sensitive trade, but it's reasonable to sell up here as 17 is rallying and just see if it sells off. And if it doesn't, you can exit the trade with probably near no loss. So basically no harm done, but you're probably going to win the trade a reasonable enough amount of time to make that a good thing to do. And you can if you egg scalped part of your trade, you can re-enter it and then scalp again. 18 an inside bar, but below one short for the Bears. You don't want to sell below a bull bar though. If you're selling below 18, it'd probably end up being a third leg down since we got the first leg down to 14 and then 15 and 16. Now another pullback. So do you really want to sell down here? I don't really think it's all that great of an idea. Probably buyers below 18 scaling in lower, and probably buyers around the bar 17 or 16 closed. It's such a big bear bar closing near its low, or not quite near its low, but it's just a dominant bear bar. It's a really large bear bar. So we're probably going to test back to around the 16 close at some point. 19, a bull bar. So I think a lot of the bears who were short were hoping 18 was going to be a bear bar closing near its low, and it was not. So they buy back their shorts. That's probably causing the rally on 19. Big tail on the top, or sorry, big tail on the bottom, and a small tail on the top. Do you buy above 19? I would not. You're buying right. You're buying right on a flat moving average in the middle of the trading range. So it's not really that good. Can you exit shorts? Yeah, you can. I mean, you can still be short on the premise that it's we've seen the high of the day, but I don't really think that you have to exit. But it's also not that great. Probably wait for one more reversal up. Disappointment on 20, which is relatively expected. If you bought above 19, you knew you were probably going to be disappointed, and you get bad follow through 20. Not that surprising. An inside bar 21, high one for the Bulls. They're hoping new bull trend 18, 19, or 17, 18, 19, I suppose, and they want to break out above the bar 17 high and to continue higher. The Bears are hoping that this is a two-legged pullback, first leg to bar 19, pullback 20, second leg 21, and they want a reversal back down. What's more likely at this point? I don't know. We're in the middle of a trading range, so I'm not really, you can be short holding for a swing. Maybe you can be. I think it's a little better to be short in this area than long, but nothing is all that great. Obviously, we're forming some kind of triangle. Did we have a triangle? I remember us having a triangle open earlier this week. This was an expanding triangle open, and then we had the opposite here. I'm just checking if Monday was a triangle. It was not. Well, the whole day was a triangle on Monday, but all right. Hold on a second. I actually pause this for a second. Sorry, I just wanted to look at another trade from Monday. So 23, a bull bar closing near its high. Yes, good for the bulls. A second reversal up, but this is one of those trades where it's a special exception, so it's okay to take because we're probably going to break up to the upside or the downside of the 18 bar range. So it's probably reasonable to buy above 23. But do you use a wide stop? Do you use a tight stop? I think if you're going to do this, you probably just put a stop below 23 and you sit on your hands and you see what happens. And yeah, this will happen sometimes. You'll make money, but you're reinforcing a kind of really tough habit to break if you're buying above 23. And that is you're buying in the middle of a tight trading range. So 18, 19, 20, 21, 22, 23, tight trading range. You're buying in the middle of an overall trading range from the day. So double in the middle of a trading range, not that great. And then you're buying on a flat moving average. So you're buying on a flat moving average in at the middle of a tight trading range where we've had like 4 or 5 straight doji bars and in the middle of an overall trading range. So while this is one of those special, yeah, you can do it and you can buy and take a chance that we break out to the upside of the 18 bar range, but I would not personally. I think that, it took me a lot, probably 3 years to just stop buying in tight trading ranges. And so I just won't do it anymore because enough, you end up losing so many of the times that it cancels out the good times that you take good trades. Like, 23, again, it's reasonable to do, but it's just not very high probability. So while it's okay to buy above 23, stop below 23, that's a reasonable swing trade. It's definitely a swing trade and it's not overly high probability. So I would personally just rather wait until we start getting some follow through for the bulls, and then I would look to buy. 24 follow through for the bulls, but a tail on the top and a tail on the bottom. So not definitive. This isn't convincing me that we've broken out of this tight trading range yet. So I would still just rather wait. A reversal down on 25. If you bought above 23, do you get up below 25? Probably not. I would say just sit in the trade. You can either, you could exit at break even on the close of it, I suppose. But I personally, if I bought above 23, I would just sit in the trade, even if we go below bar 25. You really don't need to get out. 26, a bull bar, but a tail on the top. So it's good for the bulls, though. We're breaking out above the high and probably going at least a little bit higher. 27 consecutive bull bars. So 26, 27 consecutive bull bars. How much higher are we going? Well, we might have to get above yesterday's high. You can see we got a perfect double top with it on bar 11. So we got a perfect double top with yesterday's high. Bulls want a breakout above the double top and a measured move up, maybe somewhere up here. What are the odds of that? I don't know. Probably not all that high. I think the measured move of the bodies is more likely. But you can see we never even got all the way up there. 28, a doji bar. So consecutive bull bars, 26, 27, and then a doji bar, 28. Not that great for the bulls. Still always in long, still probably going higher. I would imagine we're getting to at least the bar 10 close, the big bull bar closing near its high. And, it's not like bar 10 was a great buy. It's not really a very good buy at all. But there are some traders who will buy it and use an ultra wide stop, at least below the low of the day, if not a measured move down. And they're scaling in as the market is falling. And so they're going to use the rally, most likely, to exit their longs. So 28, it's a bad short for the bears, probably buyers below. You could argue, I would say it's probably a low one short, but it's a bull bar, so no one wants to take it. They're hoping for a lower high double top, but I don't really think it's all that likely. I think probably buyers below, and we're going to go a little higher. Outside up 29, so good for the bulls. Outside up bar, we're probably going at least a little bit higher, but a tail on the top and a tail on the bottom. So I don't know, probably not quite as good as it could be. You can see a reversal down on 30, but bars 28 and bar 30 are doji bars. So I don't know how much higher are we going. Still probably buyers below 30. It's a low too short for the bears, but we've had 5 straight bull closes. So I'm not saying sell below 30, probably buyers below scaling and lower, but I'm just not sure how much further down we're going. You can see the bears who sold, or the bulls who bought above 10 and used some uber wide stop. They bought more, maybe bought more. And they used the rally up to this high to exit. And that's what causes the tail on 30 and the bear bar 31. So I think the bear bar 31, for the bears, they triggered the low too short and they want to go lower. But really, it's just bulls exiting their longs. It's a bad short. It's a high one buy for the bulls. And we get an outside up bar 32. This is the first, one of the stronger bars for the bulls. So really good looking bar on 32. You can buy above 32. If you do, you're taking a chance that what happens happened. So you're taking a chance that this is a bull trend. The move from 23 to 32, in your mind, you would say, well, this is, I know it's a trading range and I might be buying the top of the trading range, but I think the breakout above yesterday's high is going to succeed. And in this case, you're right. What are the odds that buying above 32, you're going to end up making money and not get trapped? It's probably relatively 50-50, I would say. Nothing, I realize we have a bull leg up to this point, but it's possibly the top of the trading range, so it might not be as good as it appears. So I would say it's pretty 50-50. So it's definitely reasonable to buy above 32 and just take a chance that we rally. 33 consecutive bull bars, so now higher probability. Yes, 33 is a little bit climactic, so we might go a little bit more sideways first, but it's still consecutive bull bars, 32, 33, breaking out above the high of the day and yesterday's high, going far above them, and they're pretty much perfect bars. So I have no problems with buying up here or adding to your position up here. 30, you have to realize, though, you're going to sit through a pullback. If you bought the close 32, 33, you know the math, 60% chance we're going up here. But you have to also realize that we're probably going to pull back. We're not going to go straight up to that area. And I just want to check. We did not reach that, but we reached the bodies, I would assume. Yeah, in that area. So 34, a bull bar, but a tail on the top. So probably buyers not too far below, sellers not too far above. 35, a doji bar. It's a high one for the bulls. Probably, again, buyers below and sellers above. I think the question at this point that everyone's asking, so, whatever, you buy the close of 32 for, more of a swing trade, or you buy the close of 33, a little bit higher probability, and everyone's looking at the same price. It's the breakout point, right? Yesterday's high and the bar 11 high. This is a pretty important price. And if this is going to be a trading range day, we're going to come back to this price. So what are the bears trying to do? Well, they're trying to sell aggressively and fade this. They don't care if it ends up getting another leg up, so long as we touch this price first. But if we don't touch that price first, then those limit order bears might end up staying trapped. You can see they did end up staying trapped until towards the end of the day when we got back to that low and they got out. So it was reasonable for the bears to sell and scale in and take a chance, and they did, and those bears ended up making money. Again, trading range behavior, but you don't know that at this point in time. So if you're a bull, you see 36, it's a pullback. So what do you need? What to me says a gap is open is when you get the move above it like this, and then you get the pullback on 36. So it's everyone knows this is the pullback, right? And then you end up getting another couple bull bars and you get a close above the breakout point. So in order for me, once I see 36, I say, okay, the bears want to get to the bar 11 high. And then you get a bull bar 37. To me, this is now the bulls attempting to keep this gap open. So a stop below 36 or a tick or two below the gap, whatever you want, after you get 37 is fine. And I think once you get 38, your stop goes below 36 because now it's a higher high. So once you get the higher high from the pullback, that to me shows that the gap is open. I'll use another example yesterday. You can see the bears tried to pull back to this bar's high and they were unable to during this bar. And then once this bar, the I guess 11 o'clock bar, I don't have my bar counter on all the screen, but once this 11 o'clock bar closed above this 1045 bars, prior higher high, that to me signals this gap is now open. 37 trades above 36. So 36 is a high one for the bulls, but I don't think most traders want to buy above a bear bar. We're probably going at least a little bit higher though, because we just had 4 straight bull bars. 38 consecutive bull bars. So good for the bulls. Again, closing above the higher high. To me, this, or the prior high, creating a higher high. To me, this, signals that the gap is open. So we're probably going at least a little bit higher. 39, a pullback, but there's going to be buyers below 38 after consecutive bull bars. So limit order bulls willing to buy after we got the breakout above and the gap is open, they'll probably put a stop down here and just buy below, taking a chance we get back to at least the bar 38 close. 40, an inside bar, a high one for the bulls. So high one in a bull channel. Again, the spike up to bar 35, and now we are in the bull channel. We're probably, again, going at least a little bit higher, but I'm not sure how much higher. It's still a bull trend in a bull channel, so once you get 41 consecutive bull bars closing near their highs, you can just pull your stop below 40. That's completely fine because your premise is that this is a bull trend and it's not a leg in a trading range. You would not want to use that kind of strategy if you took a short like this. If you sold this, it's probably just going to be a leg in a trading range because this was just a leg in a trading range. So you don't really want to sell here and then you get this and this, and then you put a stop up here and you just let yourself get stopped out. You probably want to try and scalp at least a piece of it if it doesn't look like a bull trend. You can see how this looks a little bit more like a bull trend than this does a bear trend. So it's smart to spend a lot of time trying to decipher the difference between the start of trends and the start of trading ranges, or legs in trading ranges and the start of trends. Those are really important concepts to know. 41 consecutive bull bars closing at their highs. Again, probably going at least a little bit higher. We are in the window of potential midday reversal. Usually bars 41, 42, 43, 44, something like that. You end up getting a midday reversal if you do get a midday reversal. 42, a bull bar, but really climactic, big tail on the top, breaking far above the bull channel, right? So when you get a bull channel, you should draw the channel line as it goes and keep it in mind. Because when you get a climactic breakout, blatantly climactic on 42, above the bull channel line, odds are you're going to get a couple of legs sideways to down, trying to test the other side of the bull channel, which was created by the lows of bars 36, 37, and 40. So we get the breakout, and odds are we're going to try and test back down into this area, which we did and found support on 46. 43, a midday reversal attempt, but a big tail on the bottom. So disappointing for the bears who were looking to sell the midday reversal when you get a bear bar that has such a large tail on the bottom on 43. To me, more likely at this point that we're going to be a little bit more sideways. 44 consecutive bear bars, but tail on the bottom of 43, consecutive tail on the top and the bottom of 44. So, I'm not sure how much higher or lower we're really going. To me, it just looks like we're going to be a little bit more sideways. The bears, to me, I thought this was going to be more of a trading range. So my mind went back to the bar 11 high, trying to basically create some sort of trader's equation and find a good bear bar closing near low to sell to try and get back to that high. 45, an inside bar, a high one. We're probably going to get back to the bar 42 close since 3 straight bull bars. It's probably going to be magnet. Outside up 46, a bull bar closing near its high. Buyers below 45, probably expecting again. Well, first off, the tail on 46 is the second leg sideways down from 34, 43, and 44. In a reversal up 46. So do you buy above 46? I would not. I think after, I'm done buying after I see 43, 44. I think I'm now, more in sell mode and looking for some sort of reversal down. 47, a bull bar, but it's not good follow through at all. It's a doji bar. 3 straight bull bars, yeah. We might go a little bit higher, yeah, but it's really not worth doing anything. An outside bar 48 could be a second leg down for the bears. So the bulls want some sort of high 2 and a reversal up, but not worth taking a buy until we break strongly above the bar 42 high. 49, an inside bar. It's an IOI pattern with 48. So, or with 47 and 48. So some sort of final flag forming. Again, just tight trading range behavior. 50, an outside bar. So 50, the market doesn't have to actually go outside of the bar in order for it to be considered an outside bar. If it tests the high and the low, it can be considered an outside bar and an inside bar. So let's say the high of 50 was exactly at the high of 49. You could consider it an outside bar to 49, or you could just consider it an inside pattern. Either one is fine. The reason it doesn't matter is because it's breakout mode either way. So I consider 50 an outside bar, and I consider 51 an outside bar as well. And you can see 52 touched the high of 51. So to me, this is an OOO pattern, which are pretty unusual. I don't even know if I probably have a couple of examples. I'm actually going to throw this one in here. 3 outside. Oh, okay. There you go. I get to make a new folder. Cool. Second. Okay, so we have an OOO pattern. They're pretty rare. So in general, I think you don't usually get OO patterns, outside bars on the open. Yes, you get expanding triangles, which are outside bars on higher time frames. But on the 5-minute chart, I saw one the other week, and I felt like it had been a while since I had seen that sort of pattern. And outside bars are even more rare. Again, it's just an expanding triangle. And when you get an expanding triangle, odds are you're going to try and get a measure move down of the expanding triangle, this area, which we got pretty quickly. And then you can see 53, a breakout below. It moved pretty quickly when it went below. I had my finger on the button to sell below 53 or below 52, and then 53 just went a little too quickly, and I did not end up getting filled. 54, so 53 consecutive bear bars, always in short. We're going at least a little bit lower, maybe a measure move down at 52, 53, and then surprise up on 54. One of the reasons you could sell the close of 53 is if you sell the close, what are you looking to get to, right? Probably the bar 11 high because it's the closing of the gap. And you can see it's exactly a 5-point scalp at the tick. You have to go 5.5 point for you to make a 5-point scalp, but exactly 5-point scalp for the tick to get to the bar 11 high. That's not a coincidence. That's the algorithms doing what the algorithms do, creating math equations all over the place for you and me to look at and place trades based on. 54, a bull bar closing near its high. We're probably getting back to the bar 53 close. Some bulls will, or most bears will exit above 54. It's a little bit stronger than they wanted it to be. And you can see a lot of other bears chose to just sell the close at 54 because they have a better equation up here, right? Down here, probably have to risk, 8, 9 points trying to make 5. Not as good of an equation. Up here, though, first off, you're only risking a point or a tick. You can just put it right here. And they'll be trying to scalp for 4 or 5 points back down to the bar 53 close. So 55, inside pattern. Good for the bears, maybe going a little bit lower, possibly some sort of final flag, but I think it's too early in the bull trend or the bear trend for there to be a final flag. So 54 to me signifies this is not going to be a big bear trend. It's probably going to be more of a trading range. And if we do, or a leg in a trading range. So if we do get to the bar 7 or 11 high, you should exit your trade pretty quickly. 56, follow through for the bears, but not quite as good as it could be. It seems like, yes, consecutive bear bars closing near their lows, but bears are hesitating because 54 was so strong. And that creates a lack of urgency on 57. Three straight bear bars, 55, 56, 57. We're going at least a little bit lower. However, 57 is not an enthusiastic bar. It's a pretty disappointing doji bar. So a lot of bears buy back shorts at the market, causing 58, the rally, and the bull bar to be so large. Probably pulling back to around a little past 50% pullback of the range down, or the move down to bar 57. 59, a bear bar closing near its low. You can see, this is not great. So 50, first off, 59 is the third leg down, right? 52, 53, and then 55 through 57 is the second leg, and 59 is the third leg down. So it's three legs down, and 54 and 58 close really strong. So when you have these bars that close extremely strong, the way that they do against you, this is not making bears all that enthusiastic. And so if you're sitting there on the close of 59 and you're short, 59 is kind of a gift. You got to be thinking of it that way. It's a big bear bar, yeah, and maybe we'll go to the magnet below, but it's a third leg down, and it was probably a trading range. More okay to sell bars like below 52 and close of 53 because it's a first leg down. You're looking for a second or a third leg down. And instead, this is what you're getting. It's really not that great. I don't know. I bet we got some sort of leg one, leg two measured move in here. Yeah. So that would be, I would consider that a leg one pullback, leg two to bar 57. So 60, an inside pattern. To me, this is now a tight trading range. I walked away for the day on bar 60. I just don't think that there's really much left to either side. And you're probably just going to end up losing money if you trade past here. 61 consecutive bull bars. Yeah, good for the bulls, but I don't think we're going that much higher. I mean, where do you think we're going to go? Maybe up here if they're lucky. To me, it looks like you created a lower trading range, and you're buying the exact middle tick of this lower trading or the upper trading range. Sorry. So the upper trading range right now is from the bar 57 low to the 42 high. And if you're buying above 61, you're buying the exact middle of that. So that's really not that great. Disappointing follow through on 62, and a lot of the bears or the bulls who bought above 61. The bulls are hoping that they're going to get a second leg up, but they know that the pullback might be deep. So a lot of the bulls who bought above 61 just used, the tail on 63 to exit their longs around the 61 close. And that causes 63 a bear bar closing near its low. The bears want 63 and they want 64 to look like 63. You can get a breakout below the wedge and head to the bar 11 high. But I don't think it's very good to be shorting here. Either you're selling the bottom of a trading range, I'd rather wait. Reversal up 65 or 64. You can buy above 64. It's in the lower third. You are on the moving average, which isn't great, but it's reasonable to buy above 64. But what's your goal, right? Were you even able to make a 5-point scalp? And so the bulls who bought above 64 made exactly 5 points and sold. It's not a coincidence that we reversed at the 5-point magnet. 65 consecutive bull bars closing near their highs, but I don't know how much higher we're going. We didn't break out above the neckline of the double bottom, 62. So not really great to buy the close of 65, big risk, high in a trading range. Disappointment 66, big tail on the top. Any of the bulls who did buy usually end up exiting here, and that causes 67, 68, 69. So we have a bear micro channel down, but yeah, maybe it flips to always in short, but just a lot of doji bars, really not that good. No one wants to buy or no one wants to sell, and you're just at the bottom of a trading range. Not worth buying 73 after all that down, and we get a breakout attempt down. You can see all we're really doing here on 75 and 76 is closing the magnet or closing the gap at the magnet, being yesterday's or the bar 11 high. That's really all this was doing, was just trying to get to here so that those limit order pairs could get out before the weekend. So stop orders, I think 11 is good. Probably one of the best trades on the day. I would not buy 19. You can buy 23 for, like, I already kind of went over that. So, if you took it, good for you, but that's not my trade. 27, probably fine, but a little bit risky. We might get a pullback. I don't know if bulls bought a 50% pullback, probably something like that. Yeah, they bought a 50% pullback during this bar. Probably bought around 50% pullback here too, I would imagine. So they didn't quite get filled at 50%. Interesting. Well, I suppose still not. Okay. So you can buy 32, you can buy 33, you can buy above 40 or 41. And this is more of an exiting area than anything else. It's an OOO pattern, so you can sell 52, final flag. And you probably buy 64, but other than that, I would probably just be done. It wasn't a ton of stop orders today, and probably buy the close in here. For buying below trade, limit order day, right? So probably the easiest limit orders. I kind of talked about this in here if you want to do that. Buying below 3 was probably really pretty easy. I don't take limit order trades, by the way. I'm just acknowledging them. Buying below 3 was easy. Buying below 5 is a little less good than 3 because second reversal, but it's still fine. and you could probably sell above 16 during 17, but it's got to be quick to make decisions. You can probably buy below 28, probably can buy below 30, but I would just rather wait and see what happens. Probably buyers below 35 or 38. And those are, I don't know, the easier stuff on the day, at least. Probably sellers, but well, we didn't trade above 72, so never mind. The daily chart, this is really impressive from the bulls, how much they've erased this bear channel. This seemed like a really tight bear channel, and the bulls are getting an even tighter bull channel. But, look at the tight bull channel today, reversal down, just a trading range. So as strong as this is, I still think it's a leg in a trading range. I was not under the impression that we were going here. Still think we're going to pull back first and close this gap, but you never know. The bulls, when it's doing this, you just have to be under the assumption it's going to keep going up. The weekly chart, the bulls this is really, really, really dramatic and really impressive. When you get these 4 straight bear bars, the odds are you are not going to get too deep of a correction into those bars. The odds are against a couple of strong bull bars closing near their highs. And instead, look at this. We get 2 huge bull bars closing near their highs. The bulls, it just shows how aggressively, algorithm or institutions were waiting to buy. They bought literally exactly at a 10% pullback. So traders, it's been a while since traders have been able to buy a 10% pullback, probably since in here. Whoops. So since 2022, did we get 10% here? Well, yeah, we did, and then we rallied immediately. So definitely since late 2023 was the last time we were able to buy a 10% correction. So institutions were eager. So we have consecutive bull bars closing near their highs. How much higher are we going? We might get to the new high. I do not think next week will look like the past 2 weeks. If it does, that is extremely bullish. But I think it's probably going to be more of a doji bar and a sideways bar. Maybe a little bit bullish, a little bit bearish. But I still think that the 4 straight bear bars is going to have some. Well, 3 straight bear bars in a gap, but you can look at gaps of bear bars. So in my mind, 4 straight bear bars is going to have some sort of influence on the market. The monthly chart, you can see there were buyers below because this was a disappointment bar. They wanted it to close on its low, and it did not. So buyers below, probably going to go a little bit higher, but this is a big tail. Might be starting to enter a trading range, and I think 5,000 is going to be the bottom. So I don't know where the top is. Maybe the top is 6,000, and we form a trading range in here for a while. But yeah, that's pretty much it. The open of the month should be important. So this is a bull month now. So I think if we do start to go sideways next week, the open of the month will become an important magnet later in the month. All right.